This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors could say to buy as much as possible before December 10th. The company is IoT, ticker symbol IoT, Samsara, which is seemingly unrelated to the ticker name and my name, but they had hundreds of millions of revenue, up 20% year over year. And what they do is GPS fleet tracking. So that might sound wildly niche, but the profit margins are huge because what you're talking about is a B2B product that basically gets deployed on every single employee's vehicle. So it's kind of like a cross between BDB and BTC. And if you think about like computer monitoring, like a software that monitors your screen so your employer can see that you move your mouse or whatever, those were big. Those are also easy to make and maybe have a more sophisticated audience where they can, programmers are like, yeah, this one's expensive, let's just switch to this one. They tell their boss to switch whatever. Truckers and fleet management, they're not less sophisticated, but in terms of tech sophistication, yeah, who knows, right? How a fleet tracking thing is more valuable than another one or works better. All they really need to see is GPS, right? And that's a pretty much a solved problem. So what these companies really are is basically marketing companies, these GPS fleet tracking companies. The leads that you can get, like the cost per acquisition that they can get is huge because all they need to get is one trucking owner or one, trucking executive in a larger organization that has a lot of transported materials or whatever. Anyway, you get the point. They cost a lot to install, and then the sticking is high. So there's low churn because you just basically slapped these on all your trucks and your product just drove around all over the country and got dirt on and stuff. So it's a great business, even though initially it sounds like this is $100 million, multi-$100 million business. So anyway, that's IoT. And it's early for that stock. There's another stock that is early, maybe not quite as early, Rubrik, RBRK software. This is a software company. This is a cybersecurity company. And it's in the same bucket as CrowdStrike, which we always, when we hear about, this airline, all the screens turn to like the blue screen of death. And you get those pictures in the news where it's like 2,000 flights grounded, in O'Hara because of, software bug. It's like, that's CrowdStrike. They probably don't want to be associated with that specific news story, but the point is they're super locked in to these big companies' systems, and they're the leader. CrowdStrike is actually the leader, I think, over Rubrik. We can check on that. But in terms of the chart, CrowdStrike, there's another one, ZS. They look okay, whatever, but Rubrik just had earnings. So that's the opportunity. You need the right company doing good at the right time. And so only Rubrik really fits that criteria in the cybersecurity segment. Cybersecurity, of course, really boring. No one appreciates it because, if it's working well, nothing has changed, right? Nothing has happened. So it's a cost center or whatever, but that doesn't matter for the stock price because you still have to pay for it. All right, enough blabbering. Let's jump into this right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is IoT growth, 400 million, up 30% year over year, beat consensus. Profit beat consensus as well. And then ARR is that's revenue. I don't understand the difference between this annual recurring revenue versus, this is just the full year, 1.8 billion. So Yeah. Somehow the 1.8 billion is oh, this, they must have added some people recently. I'm not going to try to nickel and dime these numbers, but the point is that they all went up. And they added some big companies. So this is what I'm talking about for these GPS tracker things. IoT is kind of like a, wishy-washy word. Do you really want your washing machine like playing music or, watching you? Probably not, right? But the fleet tracker aspect really took off because that saves a lot of companies, the companies who ship the stuff, the companies who are literally the shippers of the stuff, a lot of money. This is a recent company. It's only 10 years old or so. And yeah, logistics is what this is all about. So it's kind of an old industry meshing with a new industry. And, the old industry knows how to do things. The new industry knows how to do new things. So it's really a beautiful marriage. And they have 200 plus customers paying over $100,000, which is solid. I mean, 17 customers paying over $1 million. It is just a beautiful mix of numbers. It's not too much concentration. Unless you're NVIDIA, you love that concentration because they're the best 5 customers in the world you could possibly have. But it's also not, a billion consumers paying you money, which, unless you're ChatGPT, is pretty challenging. That's lightning in a bottle. So anyway, this is the company chart. It's pretty choppy. It's pretty much chopped around since last year and change. And if we look at the levels, though, there's significant volume here. Could we have a move sideways? We certainly could. But what we do have here is this 45 level. So what's nice here is there's some movement. I mean, traditionally, the stock only moves, a few percent a day, maybe less than 5% a day for sure. This is getting skewed, but 45 is the level. So what you can do is you can hop up, and because these numbers are so good, the profit beat significantly. Here you can see it did beat as well. Here you can see it did beat as well. Here you can see it did beat as well. So I don't know what these analysts are doing because it looks like the profit beats the estimate every single time. And only in this case did the stock actually go up. So this is often why what we do is I have to look at the profit and the sales and the guidance, because if there's a company that has blowout numbers for all of those, the thing can really rocket. And that has happened before. That's like a crazy episode. But oftentimes those numbers are kind of whatever they are. They don't match expectations. They do. People are expected. People have a feel on how the company moves after them. And then all you really have to look at is how the company moves in reality. So what we are seeing is, I'm sorry, I'll stop zooming in on this zigzaggy chart, is a couple days up. Okay. 15 million in volume. That's Q2. Q1, just sell off. We'll just ignore that. We wouldn't have wanted to buy that. Sell off wouldn't have wanted to buy that. Sell off wouldn't want to buy that. And then here's another one. 10 million, 4 days up. And, there was some continuation here. It doesn't look like much. Just 20%. It took a while. So right now we're getting that 10, 15 million. We got 4 days up. We'll see what happens. But there's definitely an opportunity for 15, 20% move here. And maybe more. And the maybe more comes into play by looking at similar tickers. So DGII, DSG would be the main ones. DGII. This looks strong. I mean, sure, it got helped by the market going up, but 100% move DSG must be a private company, so we're just going to have to ignore that. But this DGII definitely looks strong. It's not a crazy amount of volume, but keep in mind the dollar volume is the same, just about. Well, not really. This is $400 million of volume, and this is, like way less than that. More like $10 million of volume. But there is activity to the upside in this sector. So there's some hope is all I'm saying. This is a crazy base and there's an earnings level. And if you buy at 46, here's exactly what I would say. If you buy at 46 and you risk at 45, that would be the best way to play this, right? Because what is the chances this goes to 60? Pretty small, right? I mean, within the next month, very small, right? But if you risk $1, you can make $10. You can go to 55, make that 10 to 1 risk reward, and you basically make up for all the times you buy one of these and it stops out. So that's the play. Not a lot of people are talking about this stock. Generally, that's a sign not to buy it. But I did see that earnings did super well. So it does matter. Above expectations is above expectations, even if it's modest. So that's IoT. We'll watch it. We're not going to hold our breath, but it's definitely early in that company's life. It's only a $20 billion company on what I just described as a massive opportunity that's overlooked. Rubrik. Now, let's talk about a company that a lot of people are talking about. So this one also kind of looks like trash. I mean, it's just been trading sideways. And, I'm purposefully not talking about stocks that, everyone's excited about. What's one that's not NVIDIA that everyone keeps getting stoked on? I don't know, like NBIS or Navitas. It's like, great, you want to get excited in this like silicon substrate company that NVIDIA invested in. Okay, maybe it'll go up and double again. But you're also kind of playing with fire here because you're kind of, messing around with the same sort of quantum rare earth move where they're having little bounces, but are they really going to bounce into Christmas? I don't know, right? So why not just buy companies that actually had earnings and sales and, have a risk level? So Rubrik is in that category. Talked about the way to buy these. You buy at 85, buy at 86, risk 85. Or, if you're watching the market, this is actually what actually can happen is, let's say this futures gaps down, and then it gaps down again. So what you can do then is you could say, hey, this is an important level, but really what I'll do is I'll buy at 83.5 and I'll risk like this after hours level, which is like 83. So you risk $2 and then you try to make $20 up to 105 like that over the course of a month or something. So that's the play, and that might not be exciting. I find myself reiterating this, just to make what is boring and repeatable, but not so boring that it's just indexing or anything, totally inactive like that. That's 20%, okay? You take a 10% position in this on a 500,000 portfolio. You put $50,000 in there. There's a ton of liquidity to do that. It trades $850 million a day recently. So you put $50,000 in there, you get 20% gain on that. That's 10 grand in a month. That's 10 grand on a $500,000 portfolio. That's not a lot, right? That's only a 2% gain. But, if you do that with 2 stocks, and I just gave you 2 stocks and they both do it, that's a 4% gain on your portfolio compounded over the course of a year is 60% gain over the year. So here's 2 security stocks. ZS, this is why you can't buy this. I mean, this is a falling knife. Great, Meta had a bounce, but you really going to expect all stocks to have a bounce that vicious? I mean, Plus, people were talking about buying Meta up here, and then it went down a further 8%. You know, great. You decided to buy United Healthcare because Buffett bought it. You got 20%, and then it sold off 20%, almost. So, bounces, falling knives are hard. ZS is out of the question. CrowdStrike is fine. It's actually pretty interesting as this left side peak, but the earnings reaction was kind of so-so. So I don't know if right now is when you want to buy that. So those are some ideas. There's that earnings reaction. If you like these ideas, IoT and Rubric, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. I post that for YouTube subscribers once a month. And if you want to head over to the Discord, and it's a weekday, I'll be there. Hit that first link in the description, stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This
Excuse
is Sam Putnam.
This is Sam Putnam.